Welcome financial enthusiasts and future moguls. Today we're diving into the wisdom of one of the greatest investors of time, Warren Buffett, to tackle a topic that affects us all: inflation. In an era where the value of money seems to be in a constant state of flux, understanding how to not just protect, but also grow your wealth is crucial. So, how do you make money during inflation? Buffett, known for his sage advice and unparalleled investment success, has insights that can guide us through these turbulent financial waters. Stay tuned as we explore actionable strategies inspired by the oracle of Omaha himself, ensuring your portfolio not only withstands inflation, but thrives. Understand the nature of inflation, often visualized as the steady climb of prices over time, is fundamentally about the erosion of money's purchasing power. Warren Buffett, through his keen observations and strategic investment decisions, implores us to grasp the deeper essence of inflation to navigate its impacts effectively. It's not merely about the price of groceries or gas going up. It's about the value of the currency in your pockets diminishing. Demand more of it to purchase the same goods or services as before. This understanding is crucial for any investor aiming to preserve and grow their wealth in inflationary times. Enter the narrative of Sarah, whose investment journey offers a compelling case study on navigating inflation by understanding its nature. Sarah, initially invested heavily in cash and bonds, began noticing the diminishing returns of her investments as inflation rates surged. The interest from bonds and the value of her cash savings were not keeping pace with the increasing cost of living, leading to a decrease in her real wealth for time. The realization that inflation was not just an abstract economic concept, but a tangible force eroding her financial security. Sarah pivoted towards real assets. She shifted her investment focus towards tangible assets like real estate and commodities, assets that historically have shown resilience or even appreciation in value during inflationary periods. Real estate, with its intrinsic value and potential for rental income, offers a hedge against inflation. Similarly, commodities such as gold and oil, whose prices often rise when the currency's value falls, provide another layer of protection for her portfolio. Sarah's strategic response to understanding inflation underscores the importance of seeing beyond the surface level effects of rising prices. It's about recognizing the silent impact inflation has on savings and investments, particularly those tied closely to the currency's value. By adjusting her investment strategy to include assets less susceptible to inflation's eroding effects, Sarah not only safeguarded her wealth but also positioned herself for growth amidst economic uncertainty. Her story illustrates a key lesson from Buffett's playbook. Understanding inflation's nature is the first step in crafting a robust investment strategy that withstands and capitalizes on economic fluctuations. It demonstrates that with knowledge and adaptability, investors can turn the challenge of inflation into opportunities for preserving and enhancing their wealth. If you're enjoying the video, hit the subscribe button and comment if you are aware of the nature of inflation. If you want to explore money-making strategies, click the link in the description to start a financial journey. Seek businesses with pricing power. In the complex tapestry of the economy, inflation weaves its threat, especially it's persistently altering the financial landscape. Amidst this, businesses with pricing power stand as bastions of resilience and growth. Warren Buffett, with his SGI for value, emphasizes the importance of investing in companies that possess the rare ability to adjust prices without deterring customers. This principle is not just a strategy, but a critical insight into identifying firms that can thrive in inflationary periods. Alex's venture into the tech sector serves as a compelling embodiment of this wisdom. Initially cautious, his investment thesis evolved as he observed the enduring demand for technology and digital services. Even as prices plunged, tech companies, particularly those at the innovation vanguard, often maintain a loyal customer base willing to pay premiums for advancements and convenience. Alex focused on firms with strong brand loyalty and innovative products, which allow them to nimbly navigate the inflationary pressures by adjusting their pricing models without sacrificing their customer base. This decision to invest in tech companies with pricing power was not taken lightly. It was a result of meticulous research into market trends, consumer behavior, and the economic mood surrounding these businesses. As inflation ticked upwards, Alex watched his investments outperform as these companies leveraged their pricing power to maintain profitability and growth. This strategic move underscored the critical lesson from Buffett's philosophy. In an inflationary environment, companies that can pass on costs to consumers without losing demand not only return, but also enhance value. Wallace's success story tag investments during inflation highlights a broader economic truth. In terms of rising prices, the strength of a company's brand, the loyalty of its customers, and its ability to innovate become pillars of financial stability and growth. It illustrates how pricing power isn't merely about the ability to increase prices, but about bringing and maintaining value that customers are willing to pay for, even as costs rise. Investing in businesses with this capability requires foresight, understanding, and the appreciation of long-term value over short-term gains. It's a testament to the enduring wisdom in Buffett's approach to investing, emphasizing not just the financial metrics, but the qualitative factors that enable a business to thrive in all economic conditions. Through Alex's journey, we see the tangible application of seeking companies with pricing power, a strategy that not only mitigates the impact of inflation, but also positions investors for sustained growth. Long-term value and debt management. In navigating the economic landscape, especially during periods of inflation, Warren Buffett underscores two critical strategies, focusing on long-term value and astute debt management. These principles serve not only as a shield against the erosive effects of inflation, but also as a compass guiding investors towards sustainable wealth growth. Emily's real estate financial exemplifies these strategies in action. Initially, apprehensive about leveraging debt, Emily knows that in an inflationary environment, not all debt is detrimental. She took out a fixed-rate mortgage to finance her investment properties at a time when interest rates were relatively low. As inflation accelerated, the real cost of her mortgage payments decreased in terms of purchasing power, effectively making her debt cheaper over time. Simultaneously, the value of her properties and the rental income they generated increased, outpacing the rate of inflation. This strategic use of debt for investment in appreciating assets illuminated the distinction between burdensome debt and leveraged debt, amplifies investment returns. Emily's approach to debt management, rooted in Buffett's wisdom, transformed potential financial liabilities into powerful tools for wealth accumulation. Moreover, Emily's focus on properties that promised long-term value, those in desirable locations with potential for appreciation and rental income growth, mirrored Buffett's investment philosophy. By identifying and investing in assets whose intrinsic value would likely increase over time, she not only safeguarded her investment against inflation, but also positioned her portfolio for robust growth. This strategy of combining prudent debt management with a focus on long-term value investment is quintessential Buffett. It requires a discerning eye for opportunities where the cost of borrowing is justified by the potential for excess appreciation and income generation. It's a delicate balance, emphasizing the importance of understanding market conditions, interest rate trends, and the fundamental value of potential investment. Emily's real estate success story is a testament to the power of Buffett's principles applied beyond the stock market. In the realm of tangible assets and real estate investing, it illustrates how informed debt management and a steadfast commitment to long-term value can create a formidable strategy against inflation. turning challenges into opportunities for wealth creation. In that sense, Buffett's journey through real estate investment, guided by Buffett's insights, showcases a holistic approach to financial growth. It underscores the importance of strategic leverage, the pursuit of excessive and enduring value, and the critical role of timing in debt management, offering valuable lessons for investors aiming to thrive in an ever-changing economic landscape. Making money during inflation, as Warren Buffett shows, isn't about quick fixes but about strategic, informed decisions. Understanding inflation's nature, seeking businesses with pricing power, and focusing on long-term value and smart debt management are keys to not just thriving, but thriving. Today, Sena's real estate growth, Alice's tech company triumph, and Emma's real estate ventures serve as powerful examples of how Buffett's principles can be applied in any investor's strategy to safeguard and growth wealth amidst economic uncertainty. Remember, the goal is not to outpace every economic fluctuation, but to build a resilient, adaptable portfolio that stands the test of time and inflation. Thank you for joining us on this journey through Warren Buffett's insights into making money during inflation. Here's to making informed, strategic investments that lead to lasting financial success. If you like this type of content, then press the like button and subscribe to our channel.